Hi, it's Lachlan Campbell of Mad Success. I am in a hotel room. This is day 3 of 7 in quarantine in Hong Kong. Yes, in July 2022, Hong Kong still requires anyone coming to the city to quarantine in a designated hotel for 1 week. We're staying here at the Marriott, and the hotel room's not huge, but it's a good size for my son and I, and we're getting through it. So I'm doing a video here for you, looking out over the harbor, bit of a gray day. There's been a lightning and thunder show earlier, so I've started filming when it quietened down a little bit. Today I'm talking about an IPO, initial public offering. I was asked a few days ago back in Canada by a friend of mine's son what an IPO is. And I thought, well, this would be a good topic because a lot of people may not really understand what an IPO is. So let's take a big step back first. Did you see that flash of lightning? You might hear the thunder in a sec. Let's take a big step back. Private companies raise money in one of two ways, either publicly or privately, and they raise that money either through debt or equity. So debt is borrowing. Equity means they will, there's the thunder, equity means they will provide some ownership in their company. So they can either do the debt privately or the equity privately, or they can raise money through public markets. So you and I go out and buy bonds, or we go out and buy publicly listed shares in a stock exchange. So when a company wants to grow, and let's say they have great revenue coming in and they're making income, but they want to grow faster. So they can privately come to you and I or to other companies like a venture capital firm or private debt or private equity company, and they can, on the debt side, either borrow money. They can borrow privately from me or you. They can borrow privately from a company like a venture capital fund, or they can borrow from the bank. They could also raise equity privately. So there are such things as private equity companies. You can even go, in Canada, there's a company called Front Funder, for example, that provides crowd private equity. So you and I can invest $500 or $1,000 or what have you in private companies. And there's crowdfunding opportunities all over the world, in the UK and US and elsewhere. So privately, companies can raise money. Well, why do they do that? So on the equity side, if they sell a percentage of ownership in the company, so let's say I owned a company and I decided to sell 10% to somebody, then whatever the valuation was of that 10%, let's say it was $100,000, I would receive $100,000 personally, because it's my company, I own 100%. I decide to sell 10% to, say, my best friend privately, for he owns now 10%. And I can take that $100,000 and do whatever I want with it. It does not have to be money that stays in the company. I've sold 10% of the company. I can now use that to go and put it as a down payment on a house, or to pay for my kids' college that year, or whatever it is. Okay? So private money can be raised through borrowing or by offering a percentage sale in the company. Public money can be raised by issuing bonds in the public market. So for example, you could go, Ford Motor Company has bonds outstanding, or HSBC, other companies have bonds outstanding that you can go and invest in. And what you're effectively doing when you buy a bond or a piece of a bond is you're lending money to that company at a certain rate for a certain amount of time. Equity, on the other hand, is in public markets, you're buying a percentage of the company. But the only way to access a company through the public markets is by buying shares on a stock exchange. Well, how do those shares get there? They get there through the process of an initial public offering. It's the very first time the private company issues shares publicly. They will then get the money back from the shares that are sold, and that money can be used by the owners for any purpose. Either they can reinvest it in the company, or lend it to the company, or they can take it out personally, and that's what most people do. So when you hear of people that are worth hundreds of millions of dollars or billions of dollars, often it's because they've taken their private company public, and that means they've gone through the initial public offering stage. It's the very first time that their company has issued shares to the public so you and I can buy them on a stock exchange, and that's what an IPO is. It's the first time a private company issues shares, i.e. they're selling ownership in their business to extract that money, extract that value out of the business for their own personal use as the previous 100% private owner. That's what an IPO is. So I hope you get that. Companies can raise money either through debt or equity, privately or publicly, and an IPO, initial public offering, is the way that a company raises money by selling equity, a share in their company, publicly on a stock exchange. You and I can then go through our online brokerage account or full service brokerage and buy shares in that company. And then full service brokerages will offer, and some online brokerages too, will offer an IPO. They'll say, okay, there's a new company coming. Let's say it's a pet supply company, and Dogs R Us or something. and Dogs R Us is going to come to the market with their very first offering of shares. Well, your broker should alert you to the fact that there's a new IPO coming, and they ask you, would you like to participate? And you can say yes or no. And if you say yes, then you need to post a certain amount of money, provide a certain amount of money that you want to invest. So say you wanted to invest, I don't know, $10,000 in Dogs R Us. So you would then post your $10,000 to your broker and say, okay, I'm allocating this amount of money. And then they will let you know how many shares, once the IPO happens and the shares go public, they'll let you know how many shares you've received for your $10,000 and at what price. Now, if Dogs R Us is marketed by the investment banks as a very, very popular business, the revenues are phenomenal, the outlook is phenomenal, well, maybe the valuation is many times oversubscribed. What does that mean? Well, let's say the Dogs R Us is valued and expected to raise through the share sale $100 million, and you've put up 10,000. Well, let's say there's so many investors that the amount of investor interest is $1 billion for that 100 million. Well, that's a 10 times interest in those stocks. So what can the investment bank do? Well, they can ask Dogs R Us if they would like to increase the size of the valuation, meaning let's say they offer 100 million shares at $1. So that's $100 million, that's the valuation. But what they could do is say, there's so much interest, why don't we push the price instead of $1, why don't we push it to $1.50 or even $2 per share and see if that interest is still there. So if they go to $2 per share and they still issue 100 million shares, now the private owners will receive $200 million for that same 100,000 shares rather than 100 million. And investment banks do that all the time. They gauge the interest in the company, they gauge the interest in the IPO shares, and if the interest is not very good, they might lower the price, they might cancel the IPO altogether. Like over the last few months when the stock market was crashing, a lot of IPOs were canceled. In fact, the IPO market in many sectors has dried up completely as of summer 2022. If, however, you're in a rising, stock market like we've had over the last 10 years, IPOs have been going out left, right, and center. All sorts of companies have been listing publicly because there's been so much demand and so much money floating around for new issues. So you can participate in that. You can ask your broker, please alert me to any new companies that are coming, and then you'll want to do an analysis on that company and see if it's interesting to invest in or not. So I hope that's provided you with enough information about what an IPO is and why and how companies raise money privately and publicly through debt and equity. And if you got value from this video, please subscribe to the Mad Success channel and share this video with your friends, family, and colleagues. Like it. Ask any questions down below, and please, stay tuned for the next video, and thank you so much for all your support. I'm Lachlan Campbell. This is Mad Success. Cheers.